What's going on with the YouTube? It's your boy Three Way Trade back at it again with another video, man. We got another trade recap for y'all boys, man. So yeah, been putting belt to absolute butthole on gold, man. Been just ripping gold apart, man. Asian session, it just hands down. We just gotta give claps up to Asian session. Asian session just been the best session ever, bro. Asian session is where it's at. I keep on telling y'all, if you're not trading Asian session, you doing yourself a disservice, man. Bro, this is where it's at. If you're not trading gold, you're doing yourself a disservice because gold has just been beautiful this year. Gold is just beautiful. It just beautiful, bro. Don't let gold be that one that just they got away from you, man. Don't be that person, man. Gold has been cutting up, man. But let me just give y'all a quick trade breakdown. Last night. I caught shorts and longs. So the reason why I took shorts last night, because as y'all know, like when market closed, one sec, let me see if I can find that set up. When market pushed up, we had all this bullish momentum. So my idea was when I was deciding to take shorts, like okay, we is overextended right now on gold, so we might have the potential to come back. So when price opened up last night at the this the 6 a.m. counter, price came up here, did a liquidity grab, and then it started rejecting back down, and then price came in here and it tapped this gap, this 5 minute gap. It respected the gap a little bit, but then it came back up. It did a false market structure shift because it didn't completely break structure, because this not a breaker structure right here because it didn't break a low. So this the major breaker structure there right here. Like okay, I ain't finna take no buys up this high because price can easily come back down, test and grab some liquidity. In which I was targeting liquidity right here, but I didn't aim for the full TP, which it did hit for full TP. I got out early because I trailed my stop losses. I trailed my own profits. So what I was looking at for me to take this counter trend trade, why would I take a counter trend trade? Okay, for one, the reason why I was confident enough to take this counter trend trade is because once I saw price corrected this small demand zone right here, and then we instantly came into the demand zone, we automatically disrespected it. It's like, okay, we disrespecting bullish order flow. So at this point, and I'm thinking like, okay, we finna get ready to start pushing down some more. We finna probably go try to grab some liquidity so we can go back up to the upside. So when I saw this disrespect from this zone, I answered because it created this why I call a sneaky zone, sneaky supply, sneaky demands is why I call them. They be the best ones. So my entry was right here, bam, and I always leave myself like a 4 point stop. Now I feel like a 4 point stop the best thing for me, and that's what I've been working with. That's what I've been rocking with. I've been finding consistency with a 4 point stop, and that's what I do. So with my model, I'm looking to trail profit. I'm looking to break even at 4 points, 1 to 1, and I'm trailing profits at 1 to 1.5. So that's how we do it. And if we get stopped out from there, hey, kudos from there. We taking our money. And if price keep on wanting to continue down to the downside, hey, that's what we gonna keep on rocking with it. So price did end up giving a 1 to 3. So that was a good trade right there. It was the kind of trend set up, so it was good. It was one for the books. But then also, this the setup really though, pro trend setup. I was waiting. I was looking for buys too, also because I knew it was overall bullish. So the reason, okay, let me show y'all why I took these buys. So we had a 1 hour demand right here, which is a 1 hour demand is always an A plus setup for me. I'm gonna take a 1 hour demand all the time if it give me my confluences. So I marked up that 1 hour demand, and what I was looking for some bullish signatures coming in on here. So I started seeing some bullish pressure coming in. We end up grabbing some of this liquidity down here. And then you notice how we rejected out of the zone. We started pushing up bullish from there, started having some big body candles. So on the 1 hour, the candle did not close in the zone. So like, okay, there's a good rejection off of that good rejection from the 1 hour candle. So okay, I wait for price to show me some more bullish signatures. This was my entry right here. So at the price created this second demand zone, I entered. My entry was right here. Bam. My entry was right here. Then I left myself 4 point stop. 4 point stop. My stop loss was right here, so my entry. One second. That wasn't my entry. Let me see. What was my entry? What was my original entry? Yeah, okay. I had a smaller entry. Cause I left myself a 4-point stop, whatever a 4-point stop was. Cause I had my stop loss right here, and it was automatically 4 point. Yeah, this was my entry right here. I got it all journaled and screenshotted. So I ended up getting in before this demand zone closed. I got my own confluences right here. So this is why I ended up getting into the setup. So I saw this price created another demand zone. That's when I ended up putting my stop under here for my break even when price created another demand zone. But notice how we had manipulation inside of the zone or this demand zone right here. We had a lot of manipulation from these candles. So I've been seeing that a lot lately when trying to trade supply and demand. You'll have a lot of manipulation inside of the zone before price actually do it exactly what it want to do. So I be like, man, that's why I don't do break of the counter interest no more. I do not do break of the counter interest no more. I'm heavily against it because reason of this being why. Because let me just minimize this right quick. Because just think about it like this. If you would have took a break of the counter entry, your entry would have been boom right here. So boom, boom, entry right there. Your stop loss would have had to been at the recent wick. So look, you would have got stopped out right here, and the trade would have went in your favor. Actually, it even came back down, manipulated even more. So I'm telling you guys this because the market, I don't know, the market makers or whoever, they own these setups, bro. It's clear as day. You can't tell me that they're not, man. They own these entries. They know people putting their stop losses below this, and they hunting the stop losses, and they turning people to liquidity. So it's safer to always have an entry below structure. You always, if you're gonna get in these zones, even if you get in break of the counter, bro, put your stop loss below the box. I don't care if you got a de-risk and aim for more, but bruh, put your stop loss below the box because if price come down here, that just really just basically mean that the price you trade wrong at that point because it's price not following structure. So price should be following market structure if we really bullish or not. So they'll let you know if we bullish or not, and they just actually give you good confirmation that you was right about the trade, and also because a lot of people get stopped out and then just for the trade they continue to go their way. I'm like, dang, man, I knew price was going to go my way, man. I knew we were going to get ready to go up, go down, but they got stopped out first. So if you're wondering why you got stopped out and why you keep on getting stopped out trading supply and demand, this is reason why, because they going to do a lot of, I've been seeing it. This year, it's been a lot of manipulation on the supply and demand zones, doing a lot of fake outs. I lost the setup exactly like this. Same exact setup. I took this same exact setup Friday, and I lost on it twice. All because of manipulation from the zone, and I knew price was finna get ready to go up, and I took a second chance, but they manipulated and stopped me out twice, trying to do break of the counter interest. That's why I preach. Break of the counter interest ain't the way no more. It's not for me. I don't like it no more. I had to complete a change of my entry model, and I had to figure out another way how to enter the market. So let's delete that bull. So you saw like I had a great stop loss right here. So the reason I saw this because we had rejection from this gap right here, and I got in from the rejection of that gap. Rejection from that gap, it was respecting bullish order flow. I had my stop loss below this candle right here because if price come back down here, the trade cook. Let's be real. It's price break this gap and don't respect the gap, it's a good chance the price cook because it can come back down here and respect this zone, but this zone don't have a good gap or internal liquidity for it to take and go back up. So I wanted to see the first gap that it left to get respected to keep on pushing up to the upside. That's what you want to see. The first gap to get respected. Because we didn't have no more gaps. Because if you want to trade and below you is no more gaps, that's called liquidity. If you want to set up, if it's just wicks, no gaps, no order blocks, breaker blocks, whatever, PD arrays, whatever you want to call it, it's pure liquidity. If it's no order flow, bullish order flow, bearish order flow, or patterns that shows you when a trade can continue, it's nothing but liquidity. So, cause you notice. Cause let me give you an example. Let me scroll back to the 1 hour chart before I get back to that breakdown. Bam. This was a perfect example. Cause I actually missed these shorts. Cause I didn't. It was so much liquidity lined up right here. I think I gave y'all a trade breakdown right here. A trade breakdown about this, but I'm finna just give y'all another example of what I'm talking about. Let me just find my what that tool that draw the what's the name? Hold on, bear with me. Well, y'all follow them off because I don't. Okay, I got a little noodle right here. I'm gonna call it a little noodle. This is my trend line, ugly trend line at that, little noodle trend line. So you see, price don't have no gaps, no supply demand zones, nothing to go off of, no confluences to take no trade. This was just clear. This is plain as day liquidity, bro. If you can't tell, if you can tell that one liquidity, you doing something wrong. You very. I'm gonna be real with you. If you can tell that there was liquidity, you are very behind on your trading journey. But don't feel bad about that because it's a lot of ways it's hard to. People don't tell you, but sometimes it can be hard to spot liquidity. The real prominent lows or the internal buy side, whatever you want to call it. It can be hard spotting that liquidity pools and those targets where the market want to go. But this was clear day. If you were trying to take a buy in this, you was cooked, bro. So this that was just obvious, man, not to take just to go short. Look at this, man. So I'm gonna just get back to the other trade, man. That was just a great example of what I was talking about. It's liquidity. If you ain't got nothing to go off of, just know it's liquidity. If you look at the price like, I ain't got nothing to look at, that's liquidity. That's liquidity, basically. If you look at price and say, what is going on? What is this? That's liquidity. And they want people to be dumb, hop in the markets and try to chase that because nothing going on. Liquidity. You gonna be liquidity. Liquidity is people just entering the markets for no reason But as I digress, man. I hope y'all understood that. So yeah. So price I end up getting out of around this counter right here. This is the counter exactly. Cause like I said, I trail my counters and I'm cool with not getting full TP now because when you do like a trailing profit system, you maximize. Sometimes majority of the time you gonna maximize, and majority of the time if it come back to you, you cool. But my system is I'm always gonna secure 1-on-1 or secure 1-on-1 when I hit a 1-on-1.5. So I'm always at least getting out. If I get a 1-on-1.5, I'm at least gonna see $400-$500 every trade. So if we keep on pushing up, kudos. But as y'all can see, we kept on pushing up, which I knew it was gonna keep on pushing up. But like I said, it did a lot of playing around, came back to entry, break evens a lot. So it ended up going for full TP. You know, I usually get my full TP anyways, 8 points, 1 or 2, or I'm either looking for 10 points and then I'd be out of the trade. So yeah, the price was overall bullish, so I just decided to take another trade. It was pro trend, so it was very high probability for me. I take these trades any day. I'm gonna continue to keep on taking these trades. I take the same trades. I'm looking for basically what I'm looking at. I'm looking for 15-minute demand zones, 15-minute supply zones. So what you have here, so this was the 15-minute supply, but honestly, another thing I can tell you, if you gonna stick to that break of the candle entry style and entry model, stay away from the 5-minute. Please stay away from the 5-minute chart, bro. The 5-minute chart is not where it's at when you want to trade break of the candle entries no more. I'm just being honest, bro. You can't tell me that it's not. I've been seeing it. Stop lying to people like this. It's not working like how it used to. It's not enough confluence no more. The markets have evolved clearly. And you're going to have to evolve with the markets. Breaking the counter entries is not enough confluence. Me, I trade the breakout from the supply and demand. I want to see more structure building up from the supply and demand. I want to see more bullish pressure. That's what I'm looking for. So stick to the 15-minute demands, bro. I just use my 5-minute for my entry confluences. I'm using 5-minute setups because like this. 5-minute demand. It was also a 5-minute demand on top of a 1-hour demand. You can't tell me that ain't A++++, bro. Come on, man. I'm trying to give y'all some sauce, bro. You can't tell me that ain't AA+++. If you got a 1-hour demand stacked into with a 15-minute demand, if every time frame lines up and then you got a demand zone, that is an A+ setup, bro. 1-hour demand with a 15-minute demand inside of it, even with a 30-minute demand inside of it. I don't even use the 30-minute. I don't need it. But you gonna see, bam, 30-minute. And it did a liquidity grab. They go to the 5-minute. You see, this why I tell y'all don't use this why I tell y'all don't use the 5 minute. Because look, the 5 minute came right here, bam, it gave a break of the candle entry. What it do? I'm just gonna zoom in. I'm just gonna zoom in right there. And I want you to tell me, what did it do? Boom. Ooh, we got a 5 minute demand. I know it's a whole lot of bullish pressure right here. This is a good zone. Ooh, put my stop loss right here. I'm put my entry right here. My stop loss right here. Bam. Soon you can't tell me that they not looking at this stuff no more. I refuse to believe anybody tell you that this stuff is not being watched and this stuff being calculated, bro. Because supply and demand is a retail strategy now, and a lot of people are talking about supply and demand. When people get introduced to supply and demand basically the new support and resistance. Don't get me wrong, supply and demand is still a great strategy, but you're gonna have to evolve it. Because they are on to it. They are on to supply and demand, bro. Look. Soon as it gave the break of the candle from the supply and demand zone, it instantly rejected back and stopped you out. Now, let's go back to the 15-minute. Leave them 5-minute zones alone, bro. I'm telling you, because you're going to get a better entry. Because you looking at consume, and then another thing what's going to mess you up, like, okay, it broke the 5-minute zone. We might be bearish. Okay. Even if you probably could have took a little nice little short after it did this, but you would have lost though, and you would have chased price, and it was still because it came in rejected from this small supply right here. Let's say you would have entered on this supply zone, came in, tapped the zone, bam, break of the candle, stop loss. If you would have put your stop loss right there, 0.8 points. Okay, cool. You would have got you something, but it's not gonna work all the time. This was just a liquidity grab just to go back up. So people would have tried to stay in that trade and probably held it for a long time and still would have got stopped out. Cause look, as you can see, on the structure on the 15-minute, price did not break structure on the 15-minute. All it did was a 15-minute liquidity grab, and it really came down and tapped this zone too. And then price ended up respecting and keep on going back up. And another thing that I did have to learn about trading supply and demand, now that I know, these be the best zones too now. Just because you got these candles that close below the zone and they wick below the zone, those trades are not invalid zones no more. Them trades are not invalid zones. They used to tell me that those are invalid zones, don't take them trade. But now, those are the best trades you can take. If you see it, because basically if you look at it, it did a liquidity grab, then it's pushing back to the upside. Those are the best supply and demand zones now. The rejection, the wick, the zones that touch the I'm fumbling the bag. The counters that come in and reject from the zone and leave wicks, them be the ones I see losing the most. People getting breaking the counter, as I just saw. I gave y'all an example. They do manipulation because they know people getting in right there on that zone. They know people got their limit orders right there on that zone. And they know people are putting their stop losses right there. Stop doing it. Use the 15-minute time frame. You want to go 4 hour. If you want to look for your daily buys, determine the daily buys. Determine what the trend overall doing on the 4 hour. As y'all can see, the 4 hour is bullish. You want to see the 1 hour time frame in correlation with the 4 hour. I had somebody come in and ask me how I look for my daily buys. So I hope you're looking at this for this how I look for my daily buys. Boom. I identified that the 1 hour is also bullish. We got breaks of structures on the 1 hour. We got a rally. We got a base, another rally. That's what you want to look. That's basically what supply and demand is. A rally base drop. Bam. Buys right here. Potentially. It's coming down to a 1 hour demand. Let's see if we got a 15-minute demand with a gap. Let's see if we got a 5-minute. It also got 5 minutes, but I'm not looking to take no 5-minute zones. I'm looking to see if this 1 hour demand gonna hold up and this 15-minute demand gonna hold up. The 15-minute right there, because if the 1 hour come down here, it's okay, be cool, because all it's gonna do is just leave a huge 1 hour wick to reject out because it came and tapped this 15-minute demand zone. Even if it don't, it come down here and touch these gaps and start shooting back up to the upside. This is an A+ setup right now forming. If it give me my confluences, I'm executing, but I'm not getting in now because it's over my my trade time. I really prefer Asian session. New York session cool too. But this what you want to be looking for when you trading supply and demand now. Leave the 5 minute alone. You're gonna catch the same good setups, and the setup's gonna be even better on the 15 minute because they're gonna have more pressure and you're gonna be able to hold. So you can turn a scalp into an intraday move. You feel me? Because if you taking a 1 hour, 15 minute demand type setup, you can turn that scalp easily to a intraday move. You can easily catch 9, 10 points. You can easily catch, I don't even saw my trades run for 30 points, 50 points. So yeah, man, I'm just letting y'all know, man, them just my preferences. I'm just trying to help y'all as much as I can because if you've been trading supply and demand, you ain't got a lot of me, bro. I know you've been getting faked out. Don't lie to me. Don't lie to yourself. You've been getting faked out, and I know you're probably looking for another way to try to figure out how can you make your interest better and how can you minimize getting faked out and being liquidity. This is how. If you go back and watch my video when I was explaining to myself that I was break even for almost 2 months straight. And the reason I break even 2 months straight, because I kept on getting faked out of zones. The zones wasn't holding out. That was iffy. I was winning some, I was losing some, but I wasn't getting profitable. And then I understood why I wasn't getting profitable and staying break even. Going back and back testing and journaling, seeing like why I keep on losing, I keep on staying disciplined. I'm trading my setups how I'm supposed to be setting my setups. It was the 5 minute. The 5 minute hold me back. I was getting faked out every time. When I got faked out five times in a row, oh, it was wraps. I already knew like, okay, I gotta find something else. This stuff ain't working no more. It's not consistent no more. I'm through trading 5 minute zones. I'm through trading these breaking the counter setups, bro. It ain't working no more. It ain't consistent. It ain't consistent no more. It works sometimes, but it's not as consistent. So take it from me. This is gonna trade your trading. Just use the 5 minute for your interest, bro. 15 minute, bro. I'm 15 minute. I'm keep on telling you, 15 minute. 1 hour with a 15 minute. You want to use the 4 hour for your direction. You want to see the 1 hour correlate with the direction, and you want to see your point of interest on the 1 hour. What do you want to enter into the market, the key levels, and you also want to scale down the zones with the 15 minute and use that for accuracy. 1 hour and 15 minute, 5 minute interest. Please, I'm begging you, please. Leave them 5 minute setups alone, bro. They is cooked. They cooked, bro. Go back test. Go look at them. They cooked. But that's the end of this video, man. I hope y'all find value in this. I hope y'all actually sat through and just got some knowledge, bro. Cause y'all see now, this was just the combine setup. I actually blew this account because I ain't had no more time to trade it. So, but I was playing around. I just started using it. It was already ineligible. I blew it a long time ago. I've been having this account ineligible for like a month. I just use it to test out different type of strategies, continuation and stuff. That's what I use it for if it's ineligible. But I don't trade it on my real account. But I'm just preaching, bro. 15 minutes. But and y'all see the profit. This is what I took, because I took this stuff yesterday. Like all them losses, I wouldn't trade my strategy. Them was trying to learn continuations and all that other stuff. But when I'm trading my strategy, sticking to this is what I'm doing. Y'all see it? Boom. But yeah, man, that's the end of this video. It's your boy 3-Way Trades. I'm gonna say it one more time. 4 hours for your directional buys. 1 hour, you want to see if it correlates with the 4 hour, and if that 1 hour zone, that 1 hour time frame correlating with that 4 hour, the probabilities are gonna be A+. And if that 15 minute zone correlating with that 1 hour, zooey mama, boy. 5 minute interest. Trust me, bro. Just trust me. And I can say all this, and you still can be losing. Why? Because you won't stick to the strategy and you won't stay disciplined. So stay disciplined. Discipline is the biggest thing you need to be worried about. I can give you the best strategy in the world, but you ain't disciplined, it won't matter. So This the end of the video. It's your boy 3-Way Trade. Peace.